Welcome to Escape Velocity, a podcast to unpack the 0 to 1 journey of founders who have built successful, scaled businesses today that we all admire. Going from formation stage to product market fit is often the most messy and least linear part of the startup journey. In this series, we dive into the early parts of the founder journey and understand the lessons of successful founders who have gone from an idea to finding product market fit and beyond. Our guest today is Immad Akhund. Immad is the co-founder and CEO of Mercury, a leading FinTech company last valued at over $1.5 billion. Let's get started. Immad, so good to have you on our program today.
Yeah, thanks for having me.
All right, let's dive right into it. So first question for you. If you weren't working on Mercury, what company would you have started?
Yeah, my second best idea, which I still think is a good idea and someone should do it. So Mercury's my fourth company, so I generally wanted to do these kind of audacious ideas, and obviously, banking was an audacious idea. The second best idea I have is building like a developer first Salesforce. So imagine like if you have like Stripe level APIs for like building a kind of integrating into a CRM, so that and I was thinking maybe you could do it so like the actual data model is based on Postgres. Because that's kind of, people think of Salesforce as a CRM, but really it's actually a database. But there's much more modern databases nowadays. So I still think it's a really good idea. I'm actually surprised no one's done it. I do think you need to have that kind of audacious thing. It would be hard to do as a first-time founder. Like you probably need to raise more money and be able to like make these difficult sales and things like that. But yeah, it still seems like at Mercury we use Salesforce, and it kills me that we use it.
Awesome. Well, let's go back to Mercury. So where were you when you first got the idea of Mercury? What was sort of the spark of inspiration that you had that you knew that there might be an opportunity here?
So I was doing my previous startup. So it was around 2013, and I was, when you do startups, you're often thinking of other ideas. So the thing that was like quite a theme for many years is this. It was called like consumerization of enterprise or something like that. I don't actually. Maybe you were VC back then and you used that kind of phrase, but basically, like when I started in 2006 as an entrepreneur, everything was really bad. Like there was no Stripe or Gusto or Slack or like all these things that we now use to run our business didn't exist. So I remember it was just quite painful to do everything, and the fact that banking was painful was not like it was just par for the course as for being an entrepreneur. But by 2013, a lot of these things were much better, right? There was Slack, there was Stripe, there was Gusto. So it just seemed obvious to me that like, oh, one thing to do is to go solve each of these categories at a time. Like we were thinking, like before Gusto existed, we were like, oh, someone should really solve payroll. Like it's so annoying that we have to use ADP and, it's so manual and these websites are so out of date. And the same thing was for banking. So the thing that really clicked for banking for me, so I mean, I'd already thought about like, this is a category that should be solved. But a couple of things happened. Number one, in 2013, there was a company, I believe it's called TrueLink. It was doing like debit cards for seniors, and it was a Y Combinator company. And the cool thing about them is like, it was just a couple of dudes in YC issuing debit cards. And I was like, wow, this is possible. Like, it was the idea that you could actually go build this was a little foreign to me, but I was like, okay, if they can do it, like, maybe I could do this in the future. So that was one thing. And then the second thing was, in my previous company, we really wanted an API into banking, and we just couldn't get that with, at the time we were using SVB. And I was like, why not? Like, this is basic stuff, right? Like, I just want to be able to like, we literally employed someone who would log into a bank account every single day to see who had paid us and manually input it into our system. It just seemed ridiculous to me. So yeah, I don't know. This idea has always seemed obvious to me. But yeah, so I had it in 2013, and I figured someone else would do it, but no one did it. So in 2017, we did it.
And how did you go from, so you had these instincts, you saw some of these signals happening and through your own experience. What did it take to go from, hey, I think there's something here, to actually starting getting to a point where you're like, we're going to formalize a business model around it, or there's a real startup and company to be built around this? What is that process? I know it sounds messy, but curious how you thought about that.
Yeah, so basically like 2017 came along and I left, I sold my previous company. I left the acquirer. And I was like, okay, what do I want to do next? And I knew I wanted to do a startup. So I had this list of ideas. There was the Salesforce idea. There was this thing. I had an idea around remote work in 2017. Uh, and I was like, okay, I'm just most excited about this. Like, you know, at least from the customer pain point, I was very sure that this was a thing. The bit that was tricky was, the fintech banking side of it. Like, I had never done a fintech company, and I wanted to really de-risk that. So I just started talking to people, and I had collected a lot of uh, like fintech contacts since 2013 because I had this idea for a while. So every time I met someone, I would be like, "Oh, let me make sure I talk to them again in the future if I ever want to like go after this idea." But yeah, being in Silicon Valley is just you can always get to a lot of people, especially in technology, right? Like there's a lot of VCs, and even in 2017, many VCs had a GP who was thinking about fintech, and they had contacts among entrepreneurs who'd done fintech, and those people had lawyers that could help you with fintech. So it was I really loved that kind of learning process anyway. So it was I had a fun time. There's definitely like the first few weeks of it, I was like, oh, do I even know what the hell am I doing here? And these people are talking like some foreign language. But once you get over that like initial hump, and then you're like getting into like really meaty subjects on like should you do a bank sponsorship or go get a chartered bank? What does a compliance team look like, and like what do they actually do, and what's the difference between compliance and risk? And I think there's a lot of like really interesting things to learn, and I think as an entrepreneur, like you have to kind of enjoy learning, and I really love learning. So it was kind of like a fun process to go investigate it and feel. And then I'd say it took about 3-ish months before I was like, okay, now I feel like I can do this, and I have a path to doing it, and that's when I fully committed. I wasn't at the start. I was like maybe, and then after 3 months, I was like, okay, now let's go. And then I changed mode from like investigatory to okay, this is what I'm going to do, and like start making a plan and start thinking about the team and all that.
And is there a trade-off in your head as an entrepreneur where you think about, given that your past company wasn't in the fintech space, obviously you talked about how you ramped up your knowledge base and trying to find out more information, and it felt like it was a doable opportunity, but where you were thinking, should I double down into what I know versus, startup is hard enough. Should I actually enter a space that I am not a quote unquote expert on and have to ramp up? Like, how did you think about that trade-off when you were in those early days of deciding whether or not to move forward?
I think there's two things there. Number one, you should do what you really, really love. So if you really love that space you're in, then you should do it, right? Like our previous company was in kind of dev tools and ad tech, and I was never that excited about it. But even though I wouldn't be a fintech expert, I would say I was like apart from like the fintech bit, I was basically an expert in everything else. I'd already been an entrepreneur for 10 years. I know how to build product. All the other things were like relatively de-risked. Like I knew how to get distribution in the space. So, you do have to have like that something special, and where you have the right to win for that idea as it was. I think when you're young and naive, you can get away with just like it's easier to go do an idea in something that's like at the edge of technology, and it has there's no, it's all execution risk, and it's all market risk and no execution risk. But I think when you're later on, you want to do generally things that are like a little bit more execution risk, and you can apply your kind of experience to that execution and less market risk. I mean, there's always market risks even in that. So that was kind of my approach.
So you have this idea, you're get conviction around this is the plan you want to move forward with. You start to put these pieces together. Talk to me a little bit about how you thought about your seed round. You went straight, to my understanding, pretty quickly to raising seed capital. What was the decision behind that? And then also with regards to raising that amount of capital, you always hear VCs talk about being valuation conscious or don't raise too much money too early. How did you think about some of those components? Did it resonate with you, or how did you structure it?
I guess for context, I raised $6 million on a 23 million post with Andreessen Horowitz leading our seed round. this is how I thought about it. I really hate fundraising. Like in my previous companies, I've failed multiple times. It's just a very stressful process. So I wanted to be, so that's one part of it. So I wanted to have like some extra buffer, basically. I also talked to a lot of fintech entrepreneurs, and doing Mercury in 2017, a lot of people were like, "Hey, this might take you." It was a lot of uncertainty of how you get it to market, right? Like, and I didn't want to be, I knew there wouldn't be much proof points between like me starting this to me getting it to market. Like, I didn't want to go back to the market. There's no point in me raising 2 million and then a year later going like, oh, we haven't launched this thing, but look, we've written some more code and we've, I didn't think like I would be able to de-risk much until we were actually launched. So I wanted to, basically I was like, 3 years was the worst estimate I got, but I was like, okay, I can probably do it faster than that. I was like, what if it takes me 2 years and then when I launch, it's going to take me another year to get the engine going, get distribution, etc. So I really was planning for a 3-year runway. So that's like unusually high. I think most people who raise their first, this would have been called a pre-seed round, are not aiming for such a long runway. But I knew that like this was hard and I wanted to give myself enough time to be able to execute it and not have to raise money in between. And then the last bit is I knew I had the discipline to not spend the money just because I have it. I don't think raising a lot more money is a bad idea. And, you should never really dilute yourself that much more than 20% in a round. But if you dilute yourself 20% and you can get a high valuation, I think it's a good idea. But don't spend the money if you've raised at a valuation you didn't deserve. I think most entrepreneurs are just really bad at keeping that discipline. But, we kept our team to basically 8 people for a really long time. And then we grew to 9 people just before we launched. But yeah, we had 6 million. Like we could have done more, but I knew. I think pre-product market fit, like you just don't want to go above 10 people. Like you want to be pretty sure you have a real need for like more than 10 people. I think if you're not in product market fit. So that was my approach. And obviously I had enough of a reputation that I could get. Originally I was aiming for 5 million and ended up at 6 million, but I felt like that was doable.
And then when you thought about structuring that 6 million, how did you think about the types of people or the types of firms that you wanted? What mattered to you at that point? I know there was a lot of conflicting advice. Only go with seed firms, only go with multi-stage firms, only go with a specialist in fintech. How did you think about what mattered to you at that point?
Yeah, I'm pretty opinionated about it. Like, I think it's very important to have one person that has real skin in the game, that has a real fund, that's institutional, whatever you want to call it, and you want to give them at least half the round. So I think it's fine to get a multi-stage firm as long as they own at least 15%. So that was my approach. We wanted to get, if it was not a multi-stage firm, if it was just a seed fund, I think 10% of the total company is fine. But if it was a multi-stage firm, I was like, I want them to own 15%. Like, I don't want them to need or want to do the next round. The reason multi-stage firms like feel like they need to do the next round is because often people squeeze them down to like 10% or 9% or whatever it is, and that forces the multi-stage firm to go like, hey, I just don't have enough ownership here, so even if this is like a big hit, I need to buy into it. And it also creates that perception for other investors. Another, like you at Lightspeed, if I went to Lightspeed and if I said, hey, Andreessen Horowitz owns 9%, but they don't want to invest in this round, you'd be like, okay, they think you're bad. Whereas if I went to Lightspeed or anyone and said, hey, Andreessen Horowitz already owns 15%, I want to get a new investor on board, then you would be like, okay, that makes sense. And also, actually, most of the time, if you do own a significant chunk of a company, you don't want to mark it up, right? Like there's a bit of a discipline in VC where they don't want to mark up their own investments. And the reason I thought a lead is important is, I've been through these hard times. We had Union Square Ventures in my previous company, and I know lead investors, like when you're in, those are the people that are going to step up. Like these tiny angel party rounds, like no one cares. And no one even has like that many deep pockets to step up. So I knew when it came to, I think, one thing I try to tell entrepreneurs, and I don't know if many people take me seriously on this, is like, you're actually like mostly fundraising to protect your downside case. Like if things go well, it doesn't matter what your fundraise is, right? Like if you're doing good, you're going to raise money in the future or whatever. But if some crazy stuff happens, like, maybe you can't launch quick enough, or you have some other issues, or the market turns, or whatever, like those types of downsides, like that's when good fundraising matters. Like the way you structure your round, the way you think about all these things, how much you raise, who you have, that's when it matters. And there's no point in preparing for the good side, because the good side you're going to be fine no matter what. So basically, like in a fundraise, even though entrepreneurs should be optimistic and all that, you should prepare for like the worst case scenario.
That's a really good framework. I haven't heard that before, but I think that's a really smart way to think about it. And like you said, most entrepreneurs are optimistic by nature, so it's a little hard to switch
Yeah.
gears. But I think that's a smart way to think about it. And then so once you have you have these investors in, you've picked the syndicate together. What did you do? How do you leverage these investors to the best of your ability? Is it mostly get out of my way while I execute, or have there been ways that you found out through your both at Mercury and before where you feel like there are certain tactics you can leverage your investors best from?
I think at this early stage, so I should add, I actually got 60 investors at that point for my seed round. So basically, mostly after I got in recent harvest, I was like, who's my dream team of like fintech entrepreneurs? And then I wanted to have like people, seed funds that like, or angel investors with like a very large portfolio. So I wanted to like really, and I think that was like kind of part of Mercury's success, is having some of these people with like a deep network and advice. So once I did that, like I think the other thing that's really important that we did pretty well at Mercury is give very good investor updates. And every 2 months I would write, even before we launched, like there wasn't that much to say, but I was like, hey, this is what we worked with in the last 2 months. This is our goal for the next 2 months. If when we launched, we was like obviously metrics and all of that kind of stuff. And investors really appreciated that. I kept them up to date on it, and it kept everyone invested, right? Ironically, but like if sometimes I invest in something and then they don't tell me anything about it for a year, and then they come a year later and they're like, "Oh, can you help me with X or Y?" And I'm like, "I don't like I kind of remember what you do, but you haven't told me anything for a year. And like, I don't know what's up. Like, why should I spend time figuring out, like, is this, I try to be helpful, but it's just not as compelling. Whereas if someone's giving me like these thorough updates for the last year, and then they're like, "Oh, I'm struggling with this. Can you help me?" I'm like, "Of course." Like I think that's just human nature. So I think that's actually the key. And the other thing that was interesting is, I at the top of every investor update, I always have asks. I'll be like, "Can you help me hire this person?" Or "Have you seen this?" Or "Can you introduce me to this?" And the interesting thing is, if you have 60 investors, is, maybe each of them will only do one of the asks once a year, but that's still like 10 responses to every ask you have, basically. So I think leading with the asks and like letting, investors want to be helpful, but you have to give them the tools to like actually be helpful. I was always surprised by there'd be an investor that hasn't done anything or talked to me for like a year and a half, and then they'd respond to an email and help me with some objective. And I was like, "Oh, that's cool. Like, I'm glad I have that person as an investor."
So here we are. You've raised your seed round. You've got 60 plus investors. You're ready to go. You've got your plan. You've got your co-founders in place. How did you think about team building? I know a lot of the first few folks in your case were people you hired from your previous experiences, but what were the things that you learned about who you needed early versus who you could have waited on? Any insights that you had when you were scaling that initial team?
I generally think, especially before you launch product, but even after you launch product, I don't think you need anyone but engineers and designers, right? Like, I think the PM type thing should be done by the co-founders. I think most of the time my view on it is if there's any new function like sales or marketing or whatever, you should try to do that yourself as a co-founder. Make sure you understand what you would want if you're hiring for that role, and get like pretty good at doing it for yourself, and then hire it out. I think sales especially, I think it's tempting for people to think, "Hey, we've raised a bunch of money, let's go outsource," or like not outsource, but like, let's go hire a sales team, right? That's just not how it works. Like, I think you want to be very close to the customer and selling yourself, and actually have like a repeatable sales process where you as a co-founder are running out of time to sell. Like, you're like, "Hey, I've got 50 leads. I know how to get leads. I know how to convert them. The maths works out, and now I need to scale. And that's when you hire a salesperson. But yeah, I would say generally stick to engineering and design. That's what we did. I was also doing mostly engineering before we launched. We had me, my co-founder was doing PM, my other co-founder was doing engineering, and then one designer and I guess 5 other engineers. I think it is worth spending money if you're like very sure that that's a bottleneck. So, we got that 9th employee that was an engineer. Like we were like, the only thing slowing us down right now is engineering. And if we just get one more engineer, we'll go like that much faster. Like it's fine to compress your runway for something that's like essential, but like you just have to be sure it's like pretty essential to you.
Yeah, I'm sure those first customers seeing Immad on the other side of those customer service tickets were pleasantly surprised, I'm sure.
Yeah, and if when we launched, we quite quickly felt like we were underwater. Like it was like, I mean, if we knew for sure it was going to be like so successful as soon as we launched, we would have got obviously customer service. But I still think it was the right decision because you just never know.
And so tell us about, so you started to get your first customers. What did you learn from your initial customer that you onboarded?
I mean, initially just things were broken. I think that's what, there's like, we had international wires that were supposed to work, but then they wouldn't work. And then we had to fix those. And we had to build like, in the first few months we started getting fraud, and we built like basically no fraud rules and no fraud engine, and we had to build that. So I would say like the first 6 months to a year was very much just like trying to keep up with the growth and like hire these essential roles that we hadn't thought about, and also like make the product work better. But the fact that we were very honest with our customers, like if it wasn't working, we weren't like, we were just like, hey, sorry, like here's a problem. This is what we're doing. And I guess it helped that I was the one kind of talking to them or something like that. But people were like surprisingly forgiving about it, I would say. Like you would think if you signed up for a service that said you're going to get international wires, but then you sign up and they don't work for several weeks, you would get annoyed about it. But I think people understood that like it was like we were doing a difficult thing, and that like we were like so open about the fact that we were fixing it, and like it was, it wasn't just like some automated customer support like thing. It was actually like me saying like, oh, this engineer is working on it right now. I think that kind of transparency helped give people confidence.
And was there a trade-off in terms of when you wanted to launch? Because you're working in the banking sector, people do expect their wires to go or their money to show up in their deposit account. Like, how did you know what was the most embarrassing product that you could launch, and what was the trade-off there given the sector you were working in?
So what happened is we actually did a full integration with one partner bank, and they made us a bunch of promises that like didn't turn out to be true. And then we had to make another integration with the second partner bank, and that obviously worked out. But what that meant is we ended up actually doing a lot of design and front end, like user facing product work. We ended up like going really far in that. Like we had a really, really good onboarding process and really good like send money process. And like I built like this kind of omni search thing that, we did all this stuff on the front end because we just like, all of our back-end engineers were like redoing a new bank integration. And like the reason it took a year and a half is because of these like 2 bank integrations, which is like quite a bit of work. So in some ways we were extremely polished. I would say we went like 2x above and beyond what you would expect on the front end side of the product, which was always like, we wanted it to be amazing. But obviously I think, I'm generally off the ilk that you try to get a product out as quick as possible kind of thing. But yeah, some of the more like, I guess, payment rails and things like that. I mean, to be clear, we thought it would work. We thought we tested it, but it didn't. I think generally speaking, like you want to try to get things out as quick as possible.
Curious in that vein, is there a feedback point that came from customers that materially influenced the platform early on?
One thing that I guess now it's going to seem really obvious, but when we launched, we didn't have it or hadn't thought about it, is like accounting integration and like things like Plaid. Like if you launch a new banking service, actually, you don't magically show up in Plaid. You have to you have to kind of do a bunch of work to show up in Plaid, or show up in QuickBooks, or and obviously people were like, "Hey, Mercury looks great, but it doesn't show up in QuickBooks. Like, how can I use this?" And I was like, "Oh yeah, I should have thought about that." And actually, having great investors helped there. Like, I got an introduction to Intuit, and then I got someone at like C-level in Intuit, and then eventually I got to this engineer at Intuit directly, and then he was just like, "Oh yeah, I'll do it in 3 days." And I was like, "There's no way like someone like Intuit's gonna do like a banking API integration in 3 days." And then 3 days later, he did it. I was like, "This is amazing." I hit like a bonanza there. Shout out to the Intuit engineer who made that happen. But yeah, that was like a surprising one. I mean, in general, whenever I come up with an idea, it's hit or miss, and whether like anyone will like it. But when when enough customers are like, well, "You should build this," it's generally pretty important. And like once we do it, people are pretty happy about it.
Yeah, that's interesting. Hopefully, this Intuit engineer is listening. One thing I've always admired about Mercury is that you guys do a lot, and you in particular, but also the whole team around the startup ecosystem and investing in what I would call almost non-core to the software product, but building a real community around Mercury for Mercury Raise and other things. How did you think about that as an early stage company that has, constraints on resources, on time, on money? How did you prioritize and know that that was something you wanted to invest in early, and how has that paid dividends over time for the core trajectory of the company?
I think it's surprising, how much you can do with how little people, if you like, on this kind of community and marketing side, if you're doing something that's actually useful. So like the Mercury Raise program, we connect customers with investors. For a long-ish time, it was like a part-time role for like one of our salespeople to run it. Like it was his idea, and then it became like a full-time role for him. For 2 years, I think it was just one person running it. And if you think about marketing, that's like the amount of money people spend on sales or ads or whatever is a lot. Like one headcount worth is really not that much, right? So I think but the reason it's like cheap-ish is because it was valuable, and it was like a smallish thing that we had we had distribution on customers, and we could get like investors. So it was like a light-ish thing that was like quite valuable. So generally speaking, with marketing, we've tried to do a lot of things, and then we do them, and then we cut the things that don't work. Like I ran out my own podcast. I mean, I still do, but that's a separate thing. But there's been all these things that we've tried, and a lot of them haven't worked, and then some things have. But it's always been like, let's try to do something that's genuinely useful. Let's do it in like the kind of the cheapest, most scrappy way we can. And then if it really is working, we can scale it up and it's justifiable. But I've generally found like some of the best kind of bang for buck there is in like the cheaper things that are like truly useful to the community, if that makes sense.
Yeah. No, I mean, I see the value all the time. And do you tie some of those intangibles in some way back to keep, core metrics within the company, or do you just kind of know that, hey, if we're touching 10x more startups, or, we'll know that that's our core demographic, and therefore expand?
I mean, at the start, 100% of our customers were organic. Even now, more than 50% is organic. So it's hard to tie it back, but, again, if you're keeping it cheap enough, you don't need to like work that hard to tie it back. Like how we think about it is like, we'll go put X amount of dollars, which is a small-ish percentage of our revenue, towards kind of these kind of even that like community building / brand marketing kind of efforts. And we'll try to do the best we can. We'll try to, the metrics might be more like number of startups touched or number of page views. Like there'll be metrics that are not like core company metrics, but they're still like you can still measure the effect, even if it's not like tied to like your direct kind of company revenue or something.
So tell us, so now, a lot of things were working for Mercury in the early days. How did you know, we talk a lot about product market fit. Like, how do you define product market fit in your own mind? When did you know that you had it? Was there an aha moment where you're like, okay, now I feel the conviction that we've hit some sense of repeatability and quote unquote product market fit?
I think in reality, we had product market fit from the day we launched. But I was very concerned that it was like, there's this whole like you launch and you get this like initial spike and then you die off and then, you got to build it up again. And I had this concern. I think I was like kind of paranoid about it, to be honest, but I had this concern that like we just had a very long spike. I was like, this is just a 6 month spike and like we might die off again. And what really gave me confidence was actually like we launched on April 2019 and then COVID happened in March 2020 and I was like, okay, this is it. Like I was like, I'm so smart. I haven't like spent our money or grown the team too much because like we're going to go through like some, the like some downturn and like, but then like April, like basically March was like a slow month. I mean, it was crazy. And then April, or maybe May, like things went crazy. Like we grew a ton. We had like a ton of e-commerce companies join Mercury. And I was like, at that point, I was like, okay, if we can take COVID and we're like 1 year in, we must have product market fit. So it took me like 12 months to really believe it. But, that's more like a psychological thing. Like it's not like, up before that 12 months, we did hire. I just didn't go. I always hired behind the curve. Like I would only get just enough support people to like be slightly above above like our need and like just enough engineers, etc. After 12 months, I was like, okay, now it feels like, it's real product market fit. And then I tried to get a little bit ahead of the curve because it was a little painful always being behind the curve. Like everyone felt like really stretched.
And when did you know on that curve that at this point I might start thinking about a Series A?
So we launched and we made a bunch of noise and it was quite a successful launch. And I had a bunch of investors like reach out to me. I think maybe actually you reached out to me as well and stuff. So I had like basically like 3 weeks after launch, I was like, there's all this interest, might as well like strike while the iron's hot. And I talked to about 13 or 15 VCs and it took about 3-ish weeks to get a term sheet for a 20 million Series A that we did with CRV. So because it was quick, like we did wrap it up. But even then, I was still very frugal, even though we'd raised like that extra 20 million.
And was it mostly built on, like you said, striking while the iron's hot, or was there another? Because I remember you mentioned when you launched, you weren't actually sure what their feedback would be. So curious how you just thought as putting yourself again in the new founder's shoe. When was the right time to think about that Series A in that context?
Basically, my view on it is like, there's certain inflection points at a startup, and like launching is one of them. And if you have a lot of like inbound VC interest at one of these inflection points, it's worth just like checking the market, right? Like my view on it was like, hey, I'll just go talk to them and I'll pitch them this idea of like, oh, we'll do 20 million raise. Actually, initially I was like a little too ambitious. I actually tried to do a 30 million raise, which was not a good idea. But anyway, eventually I scaled it down to 20. But, if you talk to 5 VCs and they're all like, you do the pitch and they're all like, hey, come meet this other partner or like come in for a partners meeting on Monday. Like you probably have enough to like pull off a raise, right? Whereas if you talk to 5 and they're all like, oh yeah, this sounds interesting and there's no follow up, right? You don't have enough to pull off a raise. So you can get a temperature check, and as long as generally speaking, you do this you can do a temperature check like maximum once every 6 months or so. Like if you do that, you can't then come back 2 months later and say, oh, actually I am raising now for real. Because like you just need like everyone makes a decision and then like you need time to like cool off and have new metrics and all this stuff. So it was more like in this kind of sense, I was like, okay, I had so many VCs reach out, the launch went good, I have a good story here. And at that point I had de-risked something, right? Like, between the seed round and the launch, I basically hadn't de-risked anything really. Sure, I could say I have a partner bank and I built some code, but like at that launch, I was like, okay, it's actually working. We have a lot of customers that were like, we were growing. I guess it was only 3 or 4 weeks in, but the graph looked like, like a straight line upwards. So it was more like test the market, and then I felt there was enough momentum, and then we closed the raise.
Yeah, no, it was a very good looking graph for sure. How did you think? So you mentioned a little bit about sizing, like 30 million, 20 million. How should founders think about sizing? Because I know VCs have a lot of commentary on picking the right number, and again, back to valuation, et cetera. But how are you thinking about it in that context at that point?
I think it's a lot easier in normal markets. I think in this market, it's just a really hard sizing. How I have always sized, like I did the same thing in my seed and A and my B, is you go talk to a bunch of entrepreneurs and you say that have recently done something similar. And you just say, what were your metrics? What was your raise? How did it go? Kind of thing. And that's what I like. It's Series A at B, C. I always push the envelope. I would like go talk to 5 or 6 people who'd recently done a Series A, and they'd be like, oh, in a similar kind of people, like maybe second-time entrepreneurs that like had a successful launch, etc. And I'd be like, okay, based on what these guys are doing, like the highest someone got was X, and I would like aim near the highest, just because I guess like I'm a little bit ambitious or arrogant or something. So that's how my approach was, and that's always been like a pretty successful approach. But in this market, it's hard because no one's raising anything. Like there's hardly any Series A's happening. Maybe there's enough data points that you could get a triangulation on a Series A, but how many fintech Series A's have happened in the last 6 months? Like it's very few. Yeah. But that's the best way to do it. Like actually, people try to think about valuations as multiples and all this stuff. But like the thing with seed and Series A, it's like a valuation is like a very small probability multiplied by a very big number, right? It's like, what is the probability of you being a unicorn, right? That's how you do valuation math. And so it's kind of a little made up, right? Like it's like, you can easily tweak the probability, and you can easily tweak like, oh, actually, it's not a unicorn; it's actually a decacorn I'm building. It's just like no one really knows. Like when you have a few 100,000 in like yearly revenue, or like even $1 million, it's like basically all guesswork on like how that scales. So what really is the valuation setting is what the market's at. Like what is the actual market clearing price for this, and the market clearing type price is determined by the previous liquidity in that market. And that's the reality of it. And I think sometimes entrepreneurs get like a little bit stuck in like thinking about this as if it's like real math. It's really not real math. It's like what is the supply and demand for Series A companies, and like what's it clearing out at.
I think that the one other thing is around how you talk about your seed round, which is what is the amount of money that gets you to your next material milestone? And so how does you were referencing, raising 5 or 6 gets you to way more than writing lines of code and getting to launch. If your Series B is a point of showing clear repeatability and scale, what will you need to get there, at least from a dollar sizing? But to your point about valuation, I think that's totally almost 100% a function of the market.
I would agree that with the seed stage, I did think about it a little bit more like that. I would say with Series A, I think it mattered a little bit less, and Series B, I think it was mostly actually like, I'm going to set this is the valuation I think I can reach. And like, I know the new investor will want to own between 10 and 15%, plus my old investors want to do pro rata. So this is kind of the dollar value I need to raise. Yeah. It was much more about that, at least for me, than like I did have some spreadsheets saying like, this is who I'm going to hire and this is why I need all this money. But I feel like that was a little bit more hand wavy than like me figuring out like the market clearing price and then how much I would raise on that.
That's very super helpful tactical advice. Maybe just taking a step back from this whole journey, we talked all the way from, Mercury as an idea all the way to your Series A. What was the most surprising part of this journey, and what do you think was the takeaway, and like what made you guys so successful in that 0 to 1 part of this journey?
Honestly, the most surprising part is that it worked. I know this is gonna sound silly, but as an entrepreneur, especially if you've been doing it for a long time, every 2 years you have an idea, right? Like basically, right? I did my initial startup, then another startup like 7 months later, another one a year and a half later, and then when my third startup, I did a different pivot basically every 2 years, and then I'm like very optimistic. So every time I was like, okay, this is the best idea ever, right? This is why it's gonna work, and I had all these reasons behind it, and to be fair, my previous startup did reach product market fit, so it did work, but it took a long time. Whereas this startup was more like we launched it and it worked straight away. So even though that's what you hope and dream for, like it was a surprising thing. And I was like, oh, wow, this like actually worked. And as I said, I was quite reticent to believe it. I think one thing that we did really well that like still serves us today is thinking very deliberately about like what's the company culture, what are the personalities of people we want at Mercury, how do we test for that, like how do we actually make sure we're hiring against that culture and make sure it doesn't deteriorate, and then at the company how do we encourage like these properties. So we were very deliberate about that from the start. Like I remember at my previous company, people would, I'd go to these like events or listen to these podcasts or whatever, and people would say, make sure you have a strong company culture. And I was like, what the hell are these people talking about? I'm just going to hire like, some good engineers. Like I don't care about culture. But it really does matter. And I think that as a reductive kind of view on it, like maybe an easier way, at least for me as an engineer, I think culture is like vaguely defined. But if you just think about personality types, I think that's like a little easier to define. So there's certain groups of personalities that work well together, and there's ones that I think cause friction and don't make great products. But yeah, that's an easier definition. So we look for like helpful people that are very humble and low ego, that are curious, that are like product minded. We used to say that don't like meetings, but don't like unnecessary process and politics and all that kind of stuff. So and then we've designed a set of kind of interview things and other things to like test against that and encourage those kind of attributes of Mercury.
I love that insight. How did you imbue that in the early days? Was it natural because the first eight or so people you knew or you hired directly and
Yeah,
then kind of built on itself, or did you put it in a more codified way early?
we were around 4 people and we wrote it down.
Hmm.
Um, and then even from the start, like the fifth, sixth people, we would ask, like just writing it down and then asking yourself a question like, does this new person that we're thinking of hiring fit this culture? Like that goes a long way. And then over time, once we had a real interview track and we would track these things, we would like come up with, who's asking the question that's going to test against like product mindedness, and like who's asking the questions. Like we have a process interview step for like that basically tests like curiosity and first principle thinking. So we tried to like codify it more over time, basically.
So two final questions for you. One on the market and one on the personal side. So on the market
Yeah.
side, I've heard this for years and years where people who talk about fintech sometimes say, it's just a wrapper around a bank, or, kind of speak in that context about fintech or digital banks in particular. Clearly Mercury is a, runaway success, but how do you think about the moat within digital banking and maybe in particular to Mercury? How did you imbue that early on, and then how do you think about that today?
I think it's important to know like what is your real differentiator. Um, and for us, the real differentiator was kind of product. And actually, if you think about it, for a lot of successful companies, it's not that they're like first. It's like the reason they're successful is because they have a great product, right? Like if you take Zoom or Facebook or iPhone, I guess iPhone was first, but like iPhone today, yeah, these are not like the only products out there. They're just the best products out there for what they do. So I actually think like product is a very important differentiator, and actually the main reason people pick most things. They pick them because like this is a pleasant experience and the customers really like it, and all this kind of stuff. So but that was the differentiator for us. So and if you think about a banking product, most bank products are really bad, right? So the bar was set very low, and I think continues to be set quite low by our competitors, and then I think we set a very high bar. But that's not necessarily like the main differentiator to other things. Like maybe for you, it's technology, or like you have a special distribution angle, or whatever it is. I mean, I'm a software product person, so for me, I hope it's mostly software and product. But it's definitely not the case that every company is like a software product as a differentiator. But if that is your differentiator, I think this like, oh, it's a wrapper around a bank. Like, I don't even know what that means really. Like it's is Facebook a wrapper around HTTP? It's like unnecessary reductive, I would say. yeah, I think that you have to just know what like really matters to people and deliver an amazing experience on that piece.
Yeah, no, I love that answer. And I think that, several years into this digital banking, I think, revolution, we still haven't seen many of the incumbents even try to frankly catch up in any material way from a product perspective, to your point.
One of the things actually we didn't touch on is like I spent quite a bit of my time when I was thinking about like doing this, thinking about like why haven't existing banks done it? Because it's not, I mean, at least it seemed obvious to me, and I felt like I had pretty good answers to that. I don't know if you want me to give you answers, but I do
Yep.
think it's like one of the things to explore when you are exploring an idea is to figure out like why hasn't it already been done? And I don't think people always have good answers to that. Uh, why haven't banks done this? Number one, banks actually don't care that much about depository. Like banks' business is lending. Like that's where they make revenue. That's where most of their people that they hire are. So they only care about depository enough that they can lend against your deposits, but they don't. That's just not their core business. That's not how they're trying to differentiate. Um, so it's a very different mind frame. Like to me, as a customer, I was always approached a bank as like, oh, this is where I store my money. Obviously, that's what they care about. But yeah, that's just not how banks think. So that's one thing. And then number two, most banks just literally have no engineering team. All right, it's all there's this whole market called banking cores and these things literally are mainframe servers that are sold to banks, and that's most of the time when you're looking at a banking app or a website, it's delivered by the same company that's building the mainframe server that is storing the money, right? Like this is not uh, that's another company, right? That's not the bank. So the bank has like very little core competency to build great products, and these third parties have no incentive to do that either. So it's a very good market to attack. Yeah, I wouldn't even, I guess I'm like, we started this in 2017. We launched 4.5 years ago, but I'm still not worried about
Yeah.
banks, at least the incumbent banks, getting good at this.
The last question for you, more on the personal side. So, I think there was an interview going around with the CEO of NVIDIA recently where someone asked him, a similar question to what I started with of what company would you be starting, if you hadn't started in NVIDIA? And he said, I wouldn't have
He
started
said
a
it
company.
wouldn't do it. Yeah, I was
So I'm
surprised by that.
curious, you are a multiple repeat founder, what is it that drives you to keep doing this? And how did when you saw that video, what made you think differently?
Um, I think it's important to know like what are you optimizing for in life, and uh, I'm definitely not optimizing for relaxation. Let's put it that way. Uh, I think there's definitely other things I could be doing if I'm optimizing for relaxation. Like, I'm optimizing for like purpose and meaning and impact, uh, and I just can't imagine what else I would do that has like that, like gives me purpose and meaning and impact, and leverages my abilities the most. Like, I think that is what startups do for me. So uh, I did explore between this company and my previous one, like becoming a VC or doing something else, but I just didn't feel that anywhere else. So yes, I mean it's hard and it's not relaxing, but I would still do it, and I'm not stopping doing it either. So I would continue to do it. So I think maybe I would say maybe Jensen was answering the very practical question. I was like, yes, this is hard. Like, yeah, but I would bet if he truly replayed his life, he would do it again. I have a
Yeah.
hard time believing he wouldn't want to have the same impact and meaning he's had in his life. But yeah, who knows? Maybe it was a much harder journey than I've had.
Fascinating. Super, super great conversation as always, Ahmad. Thank you for coming on this program. Thank you for sharing your insights. I know a lot of founders listening to this are going to really benefit from it. So thank you as always for your time. Really appreciate this.
Yeah, thanks for having me on, Soph.